Good morning, everybody, and this is your Forex day trade setups for today. So starting off with Euro USD as usual, and there are a couple of things on the higher time frames we need to pay attention to. So let me just get the levels drawn in. That's the first one. You can see the previous highs and you can see the previous lows here. So that does look like one of two things, either a wedge, which is a rising wedge, which is a bearish rising wedge. Trend was down and then we go into the wedge. So if we break the bottom trend line, a continuation to the downside. And then the other thing that it looks like is a flat top triangle. You can see there's two levels. There's the previous swing low, here's another swing low. So that's kind of where we're selling off. We've 2 weeks in a row that we've sold off, actually 3 weeks in a row that we've sold off that area. So that is a fairly strong area of resistance, which is 111.234 and 111.082. So play it as a consolidation. So we are in consolidation on the higher time frames. So if we come down to the hour, you can see we tested the 155 on Friday and bounced off it. It does look like a little bit of a flag here. So rule of thumb is quite simple. We start dropping below the low of Friday, start looking for shorts. If we can find some support in this zone, and there is a lot of support here, you can see lots of tails here. Okay, so this is the previous swing low of Friday. Friday was a pretty strong day down. So if we can find some support in this zone, which is around 110 to 62, then you're looking for another attempt at least 111.08. At the moment it is consolidation, so it almost goes far as to say, just swap my box again, watch those two levels there. So watch this high from Friday and watch this low from Friday. Until we break through one of those levels, there's no real confirmation, but I do think there is support here. You can see a lot of structure here. So somewhere in this area, and it's not exact because each of these tails is going to offer some form of support. So that's kind of the moral story. If we don't get down to the bottom here, then wait for a break of this high, which is 110.724. Break, retest, and then you're looking to test that top of that triangle. US dollar, Japanese yen, looking a little bit tired. Measured move was hit in the week, and we're sort of just bouncing around at the moment. Typical for a Monday, I suppose. Nothing really going on. We are consolidating, which looks like a little bit of consolidation. Watch the oscillators on the hour. They've crossed over. So probably one well worth playing the London breakout strategy. Wait for the first 7 1-hour bars. If we start breaking above that range, then you're looking for longs, and pretty much going to be something like this, I would assume. It's a 450 point stop loss, but I think a safer bet would be a pullback onto 118.927. So London breakout may actually have a measured move to there because it'll be the first 7 bars onto this area or any one of these tails. So wait for price to get there. If we see some positive price action, and you can probably do the 15 minutes on this one, let's get there, you'll see what I mean. You can see quite a bit of structure here on the 15 minutes. So any pullback onto structure, so either this area here, which is 119.093, or you're looking at 119, which will probably be something like that, I would assume. Yeah, 119.014. So a retest of 119, we hold 119, I would expect us to continue back to the upside. But it's going to be a little bit tired, so looking at the higher time frames, probably the daily as well. Yeah, look at the daily oscillators group to the upside. The daily is actually indicating a much deeper pullback to close this gap and sort of this structure down here. Look how far we are from the moving averages. So 15-minute trades, and keep your stops really tight. British pound, Japanese yen. You can see also a grouping of the oscillators to the upside. Look to the left, we've got all this structure here. We've got so much going on at the top here, and you might as well just draw as many of these levels in as you possibly can, because any break of one of the levels is going to be sort of targeting the next level, and then you're going to look at them as for support as well. So always an opportunity to be really cautious. And you can see Thursday, pull back onto structure, pull away. You see the rejection there and the break. So we haven't really tested this break, so I would assume we're looking at 156.476. All right, yeah, 156.476. Pull back into this area, and then you're looking at another attempt at first this level, which is 157.095. Get through that, then you're looking at 157.428, and get to this just 157.716. So this is kind of one of those that you'd be sitting all day waiting for those trades to happen. And again, more than likely, watch the 15 minutes. It'll be a pretty good opportunity. At the moment, this is a flat bottom triangle, so a break of this area here, let's just draw a box on here. So a break of that gives us a continuation down. Look what's to the left. See that cluster of resistance and support, and then there's a little tail there and a tail there. So this would be a good area to buy off as well. 156.598 or 156.600. Oscillators all grouping nicely to the downside as well. So yeah, this one is definitely well worth watching if you've got time. The hour might actually play out as well into this space. Okay, so definitely opportunity to buy there for another move to the upside. Just keep your stops tight. The higher time frames are completely sort of overbought at the moment. Okay, moving on to Euro, British Pound, and this one is doing its normal thing. So we did find support on the 155. Moral of this story is very simple. Break below 0.83681 and we're looking for shorts. Oscillators have crossed over already, crossed over far apart, but this is so typical what happens every time we get above the 155. You can see this one was a little bit more volatile than previous, and then it sets up bullish structure as we saw on Friday. Just get down to the hour. With a massive move like that, you would have expected pullback onto some form of structure here for another move up, and you can see we're almost all the way back to the downside. So weekly gap at the moment. So I would assume probably a rejection of a level higher up, and I don't see probably something like that. There's nothing really concrete. So 0.84057. You're just looking for a pullback up to there, or you're looking for a break. This is the London breakout strategy. If you break to the downside of the first 7 1-hour bars, then definitely gap close, and then you're looking, just look to the inside of these tails. So this tail would be a target, a pretty big target actually if I look at it. And just raise it up a bit, you can see all these tails here. We kind of missed it there, so that would be the first target. But if you expand like that, that is a range. And obviously, macro picture, you're looking for a break below 0.83600. Once you get a break below that, then you are looking for a bigger move to the downside, or continuation to the downside, should I rather say. Anyway, this is really setting up for continuation, so you just need to wait for rejection. Might happen here at the 155, a little flag brewing here. Another one which you could probably get away with on the 15 minutes as well. You can see all structure building. At the moment, your stop area is above 0.84057. It does look like a bit of a rounding bottom, or inverse head and shoulders. If that's the case, then you're probably looking at something a bit higher up. So that's why I'd say the current low of the day, wait for the European Open, break below that, gap will close first, come back, test this and start rejecting. That's going to be opportunity to jump in on this for a continuation of what happened on Friday. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.